Hello, everyone. It is Tuesday, July 19th. Welcome to the Final Bar. We're going to talk to Jay Soloff from Investors Alley. We're getting an options trade that he thinks is appropriate given the conditions that we're seeing this week. Happy bull market or end of the bear market. I don't know if I feel comfortable making that proclamation, but I will tell you there's certainly some short-term strength here today. We're going to talk about what this move today means for the S&P, for the Nasdaq, for the big picture. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the power of stock charts, using data visualization techniques, the technical analysis toolkit, the tools of behavioral finance, wherever else we can draw some insights to try to make sense of these markets. I tell you what, bear markets are fascinating. They're fantastic learning experiences. When I think of my career, which has been mostly in bull market phases. I think for most people's careers, that's usually how it plays out, but also with some notable bear market experiences. They are challenging and frustrating and very compelling in terms of the amount of information you can digest and the ability you have to grow as an investor. Days like this are challenging, and regardless of whatever side you're on, if you're bullish and you've been buying on some recent dips, and you have a day like this, you probably feel really good about it, but at the same time, start to feel a little nervous that we've run up so quickly. Now, what do you do if you're sitting on some paper gains? Do you take those profits and get out, or do you try to ride this further to the upside? If you're bearish, which I would describe myself overall as being fairly on the bearish side for most of 2022, these are tough days because you get a big counter trend move that moves the needle very quickly back to the bullish side. And sectors like communication services, which have been absolute dogs, are up almost 4% in one day. The way that I think you navigate this sort of environment, as always, take a step back, focus on longer term timeframes, see how the short term movements relate to the long term trends. And I will tell you, you are seeing some potential switches from negative to positive, or at least to not as negative. And we'll look at some of those examples with individual stocks here in a few moments. We have a great guest today, Jay Soloff from Investors Alley. We'll be talking to him in a short while. Elsewhere on the calendar for the remainder of this week, tomorrow on the 20th, we have Todd Sohn from Strategas in New York. The end of this week on Thursday and Friday, we have some special programming for you during this segment. During the slot on Thursday, we'll be talking about trendline analysis and best practices to apply trend lines effectively. Really important right now as you have a lot of stocks potentially breaking trendline resistance. Then on Friday, we'll do a special on learning about market history. We'll talk about looking at the deep history of the market, looking at previous periods and how they relate to where we're at right now. It's a really good way to use technical analysis to help you understand market dynamics over time. Let's continue on today's show with our market recap. I do want to start with a poll, and we asked you recently. All of our polls, by the way, are on our social media accounts, so on Twitter, on YouTube. Make sure you follow us and subscribe there. And also on our live stream page, we asked you recently, what would Charles Dow, father of technical analysis, consider an uptrend? Higher highs, higher lows, lower highs, or some combination of those two? You guys crushed it this week. I'm super proud of you. I probably say this so many times. I'm going to have to retire this poll question because I often talk about, are we seeing higher highs or lower highs? Are we seeing higher lows or lower lows? And I think making that basic assessment, the reason why that's so important is because it's a foundational part of trend analysis. You get rid of the short-term flickering ticks, the short-term movements, and focus on the overall trends. Are we gaining ground when we move higher? Are we gaining ground when we move lower, or giving up ground when we move lower? Making that assessment can be so helpful. So great job with that poll question. It is absolutely right. An uptrend is a pattern of higher highs and higher lows. Good thing to keep in mind right now as you see stocks starting to recover, like Goldman, like Netflix reporting here after the close, and other names. Pay attention to the highs and lows. See what sort of trajectory you can track given that strength or weakness. Continuing our market recap, what happened today? Decent update across the board. A lot of green on the charts we're going to look at here very soon. The S&P 500 up almost 3%, 2.8%, we'll call it, to just above 3930. The Nasdaq Composite up over 3%, outperforming the S&P 500. Mid caps and small caps outperforming the S&P as well. The small cap index, the best performer of all, up 3.5%. The VIX is continuing to come down around 2450 as of today's close. Bond markets overall coming off and interest rates steadily moving higher through the course of the day, with the 10-year yield around 302. We'll call it going into the close. The dollar index continuing to move lower. So basically, the weakness in the dollar, that wrecking ball of the dollar starting to lighten up a little bit, is giving room for other assets, other risk assets to rotate higher. And that's kind of the story that you see today. Also gives some space for gold and silver, precious metals to move higher, which you see as well. The broader commodity ETF that we tracked, the DBC, was up about 0.4%. Energy stocks had a pretty decent day as well. Cryptocurrencies sort of mixed, to be honest with you, but overall, I would say netting out to a fairly positive day. Bitcoin is currently around 23,400. That's up about 4% from yesterday. And you can see the last couple of days just continuing these big pushes to the upside. We were below 20,000 just not too long ago, right? And last week, we're talking about, can it regain 20,000 and hold it? Certainly days and weeks like we're seeing here, certainly showing that there's upside potential in a lot of these risk assets that have been struggling so much in recent days, recent weeks, and even recent months. Let's look at a chart of the S&P 500 to see what today's move really means. Here's the story, right? When we've talked about a lot of individual stocks recently, and we'll bring up a couple of those today if we have time during our market recap segment. But we've talked about how a lot of these stocks and charts are sort of range bound, meaning you had the big move lower in June. That was the last sort of new low for the year. July, we've not seen it undercut. We've not seen many things undercut their lows from June. Most things have sort of bounced and are now chopping around. And then the question is, which way does this resolve? Do you break out of this congestion pattern to the upside or the downside? What I'm seeing on the chart of the S&P is the S&P getting back above its 50-day moving average for the first time in about 3 months. It was mid-April, the last time we were actually above the 50-day moving average. That means something, right? We're getting above these highs from the end of June and from early July, right? As Charles Dow would say, and as we saw in our poll question, an uptrend by definition, higher highs and higher lows. So first off, you need to be able to eclipse the previous swing high, which arguably we're doing today on a closing basis. The question is always going to be tomorrow, the follow through, right? We've closed above the 50-day moving average. That's a big thumbs up in terms of short-term bullish sentiment. Do we contain that? Do we continue that bullish sentiment? Is there enough buying power getting put to work in the equity markets this week to push above the 50-day and start to hold that level as support? If we would break further, then quickly the 50-day moving average goes from resistance to support. That's sort of your new short-term sort of trailing stop, I guess, or short-term support level. Also, these swing highs, so sort of that 3,900 to 3,950 range. That's where we're at. That's where we're trying to break through. And the question is, do we have enough momentum to get above it? At this point, I still have to think that I don't think the lows are in for the year. I still think we're going to see a lower move at some point. But boy, the strength on a week like this, it's hard to deny the influx of bullish sentiment, or really the move higher off of incredibly negative sentiment, which is arguably what you're seeing today. It's more of a relief rally. It's more of rallying from a period of despondency or real negativity. The question is this enough to form the bottom, or is it just a bottom? And that's where we'll probably be debating it for some days and some weeks. Now, you have a number of stocks reporting earnings this week, and that's really the story, right? There's so many companies with market-moving potential, like Netflix and others, that are coming out this week. And again, the market can recover in a pretty meaningful way if you have names like Netflix and others like it, these big mega cap names, having a decent earnings quarter or trading well around their earnings release. That can really start to move the benchmarks higher. The interesting thing about the chart of Netflix, along with many other names right now, is sort of this consolidation period, right? Netflix around 200, just above that, we'll call it 200, 205 on the upper end. On the lower end, it's down here around 160, 165. We sort of settled into this kind of rectangle pattern, I guess you would call it, of the last 8 to 10 weeks. And one thing has to happen, right? At some point, we either break out of this rectangle to the upside or we break out of it to the downside. In some ways, this is one of the easiest chart patterns to interpret, because all you need to do is wait to see which side takes control. Anecdotally, do buyers take control and break us out of this pattern to the upside? Do sellers overwhelm that potential demand and push the price back to the lower side. Today, going into the close, we're closing right at the upper end of that channel, reporting earnings, and let's see if there's enough optimism around this earnings release to push higher. On the other side, a disappointing quarter, a bit of a reversion, very quickly turns Netflix into sort of a head scratcher chart, continuing this consolidation period, just a wait and see mode. We had a lot of financials over the last week reporting as well. Goldman Sachs having a nice follow through day to the upside on yesterday's session. You gapped higher, but traded lower, and we closed right back at the 50-day moving average today. Goldman Sachs continuing to push higher, about 5.5% up. Getting above 310 is pretty key, right? That was the high from yesterday. That was the high from late June. We've now gotten above it. The question for me, can we hold 310? Can we hold the 50-day moving average? I think holding above 300 or so, 305 is what continues to make this a nice bullish rotation chart. But I would be having stops that are relatively tight in this environment only because I still think the jury is out in terms of what the overall direction does from here. I think there's a case to be made that stocks can fizzle out very quickly. Bear market rallies are sudden and severe. They're super seductive, but they can also be pretty scary because they can revert to the downside very, very quickly. So make sure you have an appropriate attention on the risk side of the equation. We need to wrap the market recap. We'll be back here after a short break with Jay Soloff from Investors Alley. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. We appreciate you joining us every weekday after the close as we go through this journey in 2022 together, focusing on the charts, trying to draw whatever lessons we can from an analysis of the technical conditions. A couple quick announcements before we get to today's guest, Jay Soloff. First off, we welcome your questions. We're going to do a mailbag segment here a little later in today's show. We'll do another one very, very soon. We'd love to feature one of your questions live on the air. Best way to get your questions to us is via email, thefinalbar@stockcharts.com. We are on Twitter @FinalBarSCTV. We're on YouTube. Put a comment below the video you're watching on our Stock Charts YouTube channel. We'll gather all those questions and hope to answer one of yours live on the air in our next mailbag segment. Also, go to StockChartsTV.com. That is our on-demand platform. It is such a fantastic repository of market wisdom, great expert observations and analysis by people like Jay Soloff and many others. And special events like Larry Williams' Market Outlook, our latest episodes of The Pitch, our mid-year market outlook coming up very soon. All of that and more, all for free at StockChartsTV.com or on your mobile device. Just search for Stock Charts TV on demand. I want to welcome on today's guest, Jay Soloff. Jay's the lead options analyst at Investors Alley, coming to us from Arizona. Jay, good to see you. Welcome back to the show.
Thanks, Dave. Thanks for having me.
So it is a crazy time. I feel like that's been my segue to most discussions I've had in recent months. It's a crazy day among crazy days. You always bring a good idea in terms of how to think about options trading in this sort of environment. You have Wells Fargo up on the screen. Talk us through what you would see here and how you'd approach it.
Yeah, sure. And my crystal ball was working yesterday when I printed this chart because I was looking at a bullish trade, and of course Wells is up. Last time I checked, is up about 4%. So
decent move today. Decent move.
It always helps when I pick a trade that looks good the next day. So there's a couple things looking at a kind of a macro view on banks, and then my more of a technical view on options for this particular trade. So I like banks. After Citi reported, and we had some of these reports come out that were taken as very positive by investors. It goes along with what most people think from a macro perspective, that higher interest rates are good for banks, which make more money on interest rate spreads and fixed income products and everything else. So there was already, you had a bullish idea out there, and then you start seeing these earnings that were basically proving the bullish point to be true. So that's the fundamental aspect of it. Now, the other thing we have going on is that, and this is where sort of the bear market comes in, that put options have been really expensive because people typically buy them for protection. They're hedging instruments. So the more scared people are of the downside, the more expensive puts can get. So take advantage of a bullish thesis and also expensive options. you generally sell them in the case selling puts. So that was the trade I was looking at with Wells Fargo. Now, when I talk about selling puts, I usually talk about cash secured puts, which is, when you talk about selling a put, you might think, okay, well, I need to sell it on margin, but a lot of people aren't necessarily comfortable with margin accounts. So the way to get around that is do a cash secured put, which just means you have to have the money to buy the share, the shares if you go below that strike. So if I'm looking at selling a 40 strike put in Wells Fargo, you need to have $4,000 in your account to do a one lot. That's easier because obviously requires more capital, but you don't need special permissions. Basically, if you can do a covered call in your account, you can do a cash secured put. So that's what I normally recommend, just to, again, margin, particularly in a bear market. A lot of people don't want to deal with margin accounts.
Now, Wells Fargo sort of settled into this range recently between around 37 or so on the downside, but just breaking to the upper end of that. How would you structure an options trade given that environment?
Yeah. And that's where, again, this is an options change from yesterday. So when the stock was around 41, I was looking at around the 40 put there. Yeah. For, it was a 130, 130, 135. And the reason being is that you can see, there's obviously a lot of open interest at that strike. There is, there tends to be, or there can be a lot of, let's call it support based on the hedging flows from market makers and things like that. So 40 seemed like a good strike, and also kind of in the distance and premium that I was looking for. So at that time, we're talking about a 3%. This is the August 19th. So about 30 days, a little over 30 days, I think 32 days to expiration. So in around a month, if the put goes to zero, you make a little over 3% in a month. That is what I'm looking for in a put. I think a 3% put that is out of the money, like this one is nice premiums. I mean, Wells Fargo, chances of going from 41 to 30 for a major money center bank, it's something really drastic would have to happen. And we're already seeing the good news on banks. So I think there's some decent downside, less downside risk than normal. Some decent protection in terms of not falling too far. Now, after the move today, this might be a 41.50 put or something like that. I think that's about $1. Last time I checked, it was maybe about $1.20, still around that 3% range. But so that's get the idea. A couple strikes below where the at this level, at a 40 level, a couple strikes below where the stock price is, you should be able to get around 3%, and that's kind of what I'm looking at. Again, it's combination of selling an expensive put also, and there's a bullish thesis, but it doesn't even have to go up as long as it even stays. Now that we've had an up move, if it just stays neutral, that will work as well.
I'm so envious of you and others that trade and invest in options, because you can benefit when there's no directional movement, sort of sideways. There are ways you can benefit from it. I think that's one of the great advantages of options, is that you have a lot of more different, sort of levers you can pull, I feel like, in terms of making bets. We only have about a minute left, Jay, but can you mentioned sort of that macro thesis, sort of this overall idea of higher rates and everything. Can you just speak briefly how you combine the options when you're looking at an option chain? It seems very granular, sort of really thinking about the details of how to structure it, but you also have to do that within this broader world that we're in. How do you combine the macro to the micro and make good decisions with this sort of trade?
It's interesting because I kind of do it backwards, because I'm an options guy and I was an options market maker. So I'll tend to look for situations, like I might try to find stocks that have higher volatility than normal, and then see if I could justify that volatility going back down. And so volatility is higher in banks because they've just had earnings, but the earnings have been positive. So volatility it may not necessarily mean revert right away. There's still some banks that are reporting. So it seemed like a good area to look at in terms of these more expensive options. And then from there, I looked at, okay, well, Citigroup is good, but that's a $50 stock and you can only get about 2% premium on that one. And Wells Fargo, it's not a favorite. It's had, it's had its share of negative stuff, but the fundamentals are there. It's still cheap. It's still up on earnings. So I kind of, let's find a nice premium, 3%. Let's find a stock that it makes sense. And if all the pieces fit together, that's how I recommend the trade.
I love it. Jay, this is fantastic. I appreciate you always make this seem so simple in terms of how to incorporate this sort of trade into your process. Stay safe there and stay cool in Arizona. We'll talk to you again soon. All right.
Okay. Thanks a lot.
That's Jay Soloff. Jay's the lead options analyst at Investors Alley. I love talking with people like Jay, and it's so funny. He mentioned a number of just really important topics. He talked about volatility, and I always thought volatility was sort of anecdotally interesting until I started working with options traders, and I learned that was the game. It was all about the volatility, and you'd look at tables of just volatility and try to think about the Greeks and different ways that prices could react given different conditions. And talking with Jay is a great reminder in my head to respect volatility, pay attention to what that means in terms of the potential movements in the stocks that you're looking at. Great take there from Jay Soloff at Investors Alley. You can find more information about him, by the way, at investorsalley.com. Let's continue on today's show with our mailbag. We love to hear from you. Again, our email is thefinalbar@stockcharts.com. Keep your great questions coming, and let's get to question number one. I am so curious to have some insight on when a market turns and why. I accept no one can pick or find it. That said, it is usually big money that makes a decision. Is it like any herd of animals or birds that all sort of gravitate to one sort of thing when one runs abruptly? And yet a much larger question talking about the herd mentality on the street. And in my experience at a larger firm, is it this kind of thing where someone makes a decision where you're turning the market? It's a really, really thoughtful question. And we'll see how much detail I can get into within the scope of our mailbag. This could be a larger sort of course or special that we run it on. And the answer is no. I mean, there's some, there's no like broad coordination. There's no Illuminati like discussion that happens where people all agree on it. I will tell you at larger shops, and even at smaller shops, there's always investment committees, usually investment committees, and a lot of discussion about how people are positioned and how the firm is positioned and what that means. And there's certainly at times talk about moving more risk off or risk on, and that absolutely has the potential to change things. What you have to remember, though, there are a lot of different market participants with a lot of different motivations on different timeframes, right? So you can see that when you just look at insider trading, right, which is a manager of a company trading his own company's stock. There are a lot of reasons why a manager of a company may be buying or selling at any particular day. It might be to raise capital for some purchase. It could be estate planning. It could be whatever it is. So it's hard to sort of draw conclusions on individual trades or sentiment that you would see from something like insider trading. And I think the same is true at larger firms. While you think that sort of the market is this big machine where these larger firms are doing things, I don't think it's as well coordinated as you probably would guess it is. And even at a larger firm that I was at, there are so many different funds doing so many different things. A lot of times there would be very different approaches that would be playing out at the same firm, even at the same moment, where the trading floor would have to be, doing very different orders for different funds because their mandates were very, very different. So while having said that, there is anecdotally the smart money and in general, the ability of larger firms to try to anticipate moves, because in general, a larger firm would probably be very happy buying into a market like this that is down 20, 30, 40%, because if you buy into the long-term fundamental thesis of these companies, you're basically buying things at a 30 to 40% discount, which is totally fine. And you're not trying to top tick or bottom tick a market. You're just trying to accumulate and benefit from the larger term trend. So in that case, I certainly think that could be what we're seeing playing out, and particularly when the bear market ends. That is usually what is driving it. That was the best I could do to summarize my take on that. I'll try to fill in more of those gaps later. Next question: seeing lots of higher highs and lows on the daily charts, relative strength turning upwards through the zero line at the stock, sector, and industry level, and point and figure charts going into columns of X's for the past 8 months. It seems like we haven't seen that fingerprint much, except for energy. Is this a change of character? I think that's a really thoughtful question. And that's and I appreciate using that change of character in your question. That is how I like to talk about things, right? The market has a certain feel until it doesn't. When I look at the chart of JP Morgan, I see a clear uptrend in about the first third of the chart. I see a consolidation period, right? A topping pattern for the middle third of the chart, and then a downtrend for the right third of the chart. And the question is, have we seen enough to change that? On the chart of JP Morgan, I don't think so yet. On the chart of Goldman Sachs, maybe. And I think with a lot of these charts, we're getting to the maybe portion, right? Where they may have moved up enough where they start to look a little more interesting. Netflix might be a really interesting one to watch along those lines. It's actually up quite a bit in the aftermarket, about 8% to 217. So it's kind of up in this sort of range. That sort of thing happens on a bunch of charts. And this market all of a sudden goes from being a clear downtrend to much less clear of a downtrend and setting up for at least some meaningful rally, whether or not it's within the context of a larger bear market phase. You're certainly seeing a short-term tactical bull market run. I would certainly pay attention to all of those, what I call the phenomena stocks, these 8 sort of mega cap tech consumer communication services names. Recovery here is going to be pretty constructive, and I think that will tell you enough about the recovery potential of the market. Same with Meta and others. I think they have more to prove to get an all clear sign, but that's certainly something that I would be watching. Just to finish off our final question, is Elliot Wave Theory reliable? And you said as a follow-up, apparently it is. And according to Elliot Wave Theory, we are going lower. So I don't use a lot of Elliot Wave Theory on the show. I like to bring on some guests that use Elliot Wave Theory. And it reminds me, I actually haven't had a big Elliotician on in quite some time. I'm going to look through and think through some options. If you guys have ideas of someone you'd like me to bring on the show that's more of an Elliot Wave aficionado, let me know in the comments or on Twitter at FinalBarSCTV. We're certainly happy to reach out to the right people and bring them on the show, get their take on things. But the challenge I have a lot of times with Elliot Wave, it can be very subjective. So while you said in your question, according to Elliot Wave Theory, we're going lower, that's according to one person's interpretation. There are a lot of different interpretations. It's sort of like according to trend lines, we're in an uptrend. That depends a lot on how I draw my trend lines and how I interpret them. Having said that, I would love to bring on some more Elliot Wave experts. So let me know again in the comments or shoot us an email, thefinalbar@stockcharts.com. Let me know who we should bring on the show. We have to wrap today's show, unfortunately. Thanks for those great questions, everyone. But we need to move on to the 3 and 3. Let's talk about 3 charts in 3 minutes that tell the story of this market. And here is chart number 1. The Nasdaq Composite. We talk about this sort of rotation. Again, I love your great question about, a change of character or seeing that. I think one way you'd see a change of character in the Nasdaq Composite is sort of right where we're at. If you look at this pattern, you could call this a couple different things. I might call this an ascending triangle pattern, probably for simplicity, but you have a consistent resistance level. It's down 11,700 for the Nasdaq Composite, and you have an increasing trend line here tracking the lows. This usually resolves to the upside, and we've closed above the upper boundary today, which means through the remainder of this week, can we get upside follow through? Can we continue this rotation out of that pattern down to the upside? We've also gotten above the 50-day moving average and closed above it for the first time since early April. The more you see those sorts of things, the more stocks that regain the 50-day, the more stocks that break above their previous resistance, the less negative I will be about this market and the more constructive I will start to be. The Nasdaq Composite's right at that point where I start to feel like short-term optimism is warranted. The RSI needs to get above 60 as well. Chart number 2 is Goldman Sachs. Nice follow-through day today. Yesterday, we talked about the gap higher, but the lower closing right at the 50-day moving average, less encouraging. Today, you get nice upside follow-through. A chart like this, I'd want to get above 330, which would take us above the swing high from about a month ago and maybe 6 weeks ago. That would be a nice rotation, completing that move to the upside. I'm liking the fact that the RSI is getting above 60. This is more and more encouraging on individual names. Finally, the chart of Netflix. After hours, the stock is gapping higher. I haven't had a chance to dig through the earnings, but I'll do that after the show is over. Can we get above that high from June and stay there? These phenomena stocks, the FANG stocks, they can get above previous resistance and hold those. That previous resistance becomes support. That could be a meaningful level to watch right around $200 for Netflix. Netflix holds 200. This is a decent move with potential to move the broader market up as well. RSI needs to stay above 60 as it is doing so far today. Folks, that's a wrap for this show. I want to thank Jay Soloff from Investors Alley joining us from Arizona. Great take with an individual options trade on Wells Fargo. As a reminder, all of our previous discussions are at StockChartsTV.com. For Stock Charts in Redmond, Washington, I'm Dave Keller. Be safe. Have a great night.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.